If you're just setting up as a freelance business in the UK, should you set yourself up as a sole trader or as a limited company? In this video, I want to share with you how I set my freelance training business up and the reasons why I decided to change the structure of my business probably about 2.5 years into it. Hi, I'm Bev Thorogood. I've been running my business for Resco Training and Coaching since April 2018 when I decided to leave a long-term career with the Ministry of Defence to set up in business for myself. When I first got started, it is really fair to say I had absolutely no idea about how to set up or run my business. My drive was completely around getting out of employment and having a bit more autonomy over how I structured my days. Self-employment seemed like the obvious solution, but I really didn't know what I was doing at all. My husband had left his job with the military after 38 years and had set up a sole trader business, and it seemed pretty easy, so that's what I decided I would do too. Well, I say that's what I did. I have to be honest here and say I flippin' hate anything to do with money, apart from spending it, of course. And my other half has always been incredibly good and disciplined with money. So I asked him to set me up as a sole trader. It didn't cost anything to register as a sole trader. I think he pretty much registered me for self-assessment, which meant I have to do a tax return, and I was issued a UTR, or a unique tax reference. And as far as I'm aware, that was it. Then I just had to keep records of my income and my expenditure and complete an annual tax return to HMRC. Again, I didn't really have much involvement other than keeping my invoices and my receipts and passing them over to Mark for him to do my tax return. After the first year, I did take on a bookkeeper and an accountant to do the boring stuff like balancing the books each month and doing my end of year tax return. I wasn't that registered at that time and life was pretty simple, I guess, but after a couple of years, I found that being a sole trader possibly wasn't the best thing for my business, and I decided to register as a limited company. I'll share with you in a bit why I did that, but first I'll explain what being a limited company or a sole trader actually means. Now, I have to caveat this with I'm not an accountant, so I'm not going to be using all the financial jargon, nor am I in any way offering any kind of accountancy advice. In fact, I would definitely speak to a good accountant before you decide whether sole trader or limited company is going to be right for you and your business. They'll be able to explain more effectively the pros and cons and help you to figure out the best thing for you and what you want to achieve. But this is my experience and my story, and hopefully it might help you if you're not sure which way to go. So when you're a sole trader, you and your business are one and the same thing. What that means is you have full liability for any debts, and potentially if you're sued or anything horrible like that, your home, your assets, your possessions, well, they're all potentially at risk. Whereas when you're a limited company, you and your business are seen as separate legal entities, hence the name limited. And that means your liability is limited to your business, and your personal finances and assets are generally safe. Now, when you register as a limited company, your company details are held by Companies House and they're more transparent. So anyone can look up your company and see your financial and legal situation, and getting registered has a cost implication there too. Generally, as a limited company, your admin costs will increase, particularly your accountancy fees, since your accountant will have more work to do for you. But there's a tipping point when your revenue goes over a certain amount, and if I remember rightly, it's around the £35,000 mark, when the tax benefits are better as a limited company. If you know or you think your revenue is going to exceed that amount, it's likely to be beneficial to incorporate your business. But again, I'm not an accountant, so I don't know the exact ins and outs, and you'll definitely want to take professional advice around the financial sort of pros and cons and that tipping point of whether you're better being a sole trader based on your financial goals or being a limited company. I remember having a conversation with Lucy, my accountant, when I was thinking about incorporating the business, and she talked me through all the pros and cons. And at the time, my business was around that threshold. We'd just come out of lockdown and things were just starting to pick up a bit. So I was pretty confident that my income would benefit from the tax implications that a limited company rather than a sole trader would bring. We also talked about how to go about registering the business, and I'm happy to say that Lucy sorted everything out for me, including submitting the articles of association which are needed when you incorporate. And again, I'm not fully au fait with what all these are, but I believe they kind of outline the managerial and administrative structures of your business, and they include information about shareholders and directors, etc. Now, of course, there was a fee for sorting all of that out. I think it was a few £100s, but as it's not something that I had any interest in, and although I probably could have figured it out, I was more than happy to let Lucy crack on and just get it sorted for me. Let me quickly cover the pros and cons of both sole trader and limited company as I understand them and from my experience. As a sole trader, as I've already mentioned, your bookkeeping is way simpler. Your income is all yours and you just have to do a tax return at the end of the year. It's much easier to do your own bookkeeping if you want to, which in turn is going to keep your costs down. Or you could just pay a bookkeeper to do the weekly or monthly accounts admin and then do your own tax return at the end of the year, knowing that your bookkeeper has kept everything up to date and in order, so you haven't got bags of receipts in carrier bags and things. Also, you have more financial privacy in your business as you're not listed on any public-facing databases such as Companies House. Now, some of the downsides to being a sole trader are, again, as I've already mentioned, you are personally liable, so therefore your personal assets may be at risk if your business gets into financial difficulties, as you and the business are one. In the event that things go horribly wrong, you aren't separated from your business. So if you're looking for investment for growth or expansion, you might find that getting that investment or being given a business loan is a bit more difficult as a sole trader. One of the biggest reasons, though, that I made the shift to limited company was because on a couple of occasions I quoted for work with large corporate companies to be told that they wouldn't hire me because I was a sole trader. Now, I never really got a satisfactory answer as to why, but I guess they probably couldn't check me out via Companies House. I was a bit of an unknown entity and their policy was simply no sole traders. I was working predominantly with large corporates and public sector organisations. I knew that just losing even one contract was worth the additional cost of being a limited company. At the pros and cons of incorporating your business and becoming limited. Well, let's start with the cons. It's definitely more complicated and it can feel a little bit overwhelming. And again, this is where a good accountant can really help take some of the stress and the worry away. It's an expense and one which you may not want to have as a brand new business. Most people I know who go freelance don't go into their business with an in-depth business plan and a shed load of capital to get them started. Usually, like me, they're transitioning from employment into self-employment and often doing so on a bit of a shoestring. The ongoing costs are greater as a limited company too, as you're almost certainly going to want to hand over your accounts to a professional. And then you've got your end of year tax return. That's going to be more complex and probably more expensive as well. Now, while it's a good idea to keep a separate bank account for personal and business finances, regardless of whether you're a sole trader or a limited company, from a legal perspective, you don't have to separate your finances if you're a sole trader. But as a limited company, you will need a dedicated business bank account. And again, depending on who you bank with, this might incur an additional cost. On that same score, it's very easy as a sole trader to move money around and not have to be quite so strict about using your personal account for business. Try that again, and I'm knocking my phone off. Same score, it's very easy as a sole trader to move money around and not have to be quite so strict about using your personal account for business purchases and vice versa. Although it's definitely best practice to keep them separate, but it's not quite so easy if you're a limited company, because quite frankly, it's not your money, it's the business's money. So if it's way more complex and expensive, I guess you're asking the question, why would you even bother becoming limited? Well, as I've already mentioned, one of the biggest pros is that you're no longer your business, and therefore you as an individual are not going to have your personal assets taken into account if things start to go horribly wrong. Your house and your family are better protected. And I would say for most people, that's probably the main reason that they choose to go limited. Also, because of how you take money out of your business, effectively you become both a shareholder and an employee. There are clever little ways that your accountant can reduce your tax liability, all of which are perfectly legal. Because of the way you get paid, the tax elements are calculated differently. So, for example, as an employee of your own limited company, you can choose to take a small salary and take the remainder of your income as dividends. And again, this is something that you want to speak to your accountant about, but a certain amount of your dividends can be taken tax-free. Now, as I found out, if you're working with bigger companies, you may find that not being limited means you're out of the running immediately when they're getting quotes and tenders for projects, and you might therefore be missing out on opportunities that would easily cover the additional expenses associated with running a limited company. But there were a couple of benefits that I discovered that I wasn't really expecting. And the first is that there's a perception that if you're a limited company, you're bigger than you really are, potentially. So despite the fact that I was still a one-person show as both a sole trader and as a limited company, there was definitely a perception that my business was bigger than it really was. Now, I never pretended to be anything that I wasn't, but I always got the impression that I was perceived differently as a limited company rather than as a sole trader. And because of this, I believe I began to attract clients that I possibly wouldn't have attracted previously. Now, I don't have any hard evidence for this, but it definitely felt that way, and I definitely saw my revenue increase. Of course, I can't tell which companies would have turned me down for not being limited, as that question didn't arise once I was limited, but I think it's fair to say that there were contracts that I won that I don't think I'd have won if I hadn't incorporated the business. Second benefit, which is again difficult to quantify, is that I felt my confidence and my behaviour changed when I became a limited company. I wouldn't say I ever treated my business as a hobby, but I don't think I ever really felt like a proper business. Even though I'd worked with some amazing clients, it always felt a little bit like it was a fluke that I got the clients. It's really hard to explain, because in reality I didn't do anything hugely different in terms of how I marketed myself or how I managed my back-end processes, apart from, of course, the stuff that my bookkeeper and accountant were doing. But I just found that calling myself the director and referring to the business as Floresco Training Limited felt more grown up. I would say I saw a significant increase in the number of inquiries and a corresponding increase in revenue as a result. And this began pretty quickly after I registered as a limited company. Now, perhaps my increased confidence showed up, and perhaps I came across in my marketing messaging, or perhaps businesses that would have previously not even have got in touch with me as a sole trader were reaching out to me. I don't know, I have no idea. All I know is business picked up noticeably when I made that change. I felt like, I guess my mindset shifted from playing at having a business to actually having a business. I think I started to take things more seriously, and I'm guessing my habits and behaviours changed accordingly. Who knows? But whatever it was definitely a noticeable benefit. Now, one of the other questions that you might want to ask yourself when you set up is whether or not you want to be registered for VAT. In the UK, VAT is our sales tax. It's added to goods and services sold to consumers, and it's currently 20% for most things, although there are a few things that are charged at a different percentage. Now, you don't have to be VAT registered until your revenue reaches a certain threshold, which at the moment is £85,000. However, if you're only working with corporate clients, it might be worth registering for VAT anyway. Again, a couple of reasons for this in my experience are companies generally expect you to be VAT registered, and I had a couple of occasions where not being VAT registered just made getting onboarded to a supplier register just a bit awkward. And often what happens is when you enter a contract to do some freelance work for a company, they have a process for getting you onto their accounting system so that they can pay you. They usually run checks to make sure you're solvent and that there's nothing likely to come back and bite them to date. And they take your banking details, sometimes your international banking details, company registration details, and of course your VAT status. And whilst not being VAT registered wasn't a deal breaker, it did occasionally cause a little bit of back and forth trying to explain to the person in the finance department that I didn't have a VAT registration number and that the invoice wouldn't include VAT. Once I registered for VAT, this process got way easier. Also, once you're VAT registered, it means you can then claim the VAT back on any of your own business expenses. So anytime you buy something for your business that has VAT included, you can claim it back. And again, I think there's a perception that if you're a VAT registered business, you're seen as being a bit bigger and a bit more established than you possibly would be otherwise. The downside is if you have both corporate and private clients, you can't pick and choose who you charge VAT to. So if you have private clients, that's sort of business to consumer or B2C clients, you're either going to have to add 20% VAT onto the cost of any services you offer, which they won't be able to claim back, or if you don't want to put your prices up, you're going to have to absorb that 20%, and that way, you're going to reduce your own profit margins. One word of advice though, if you do charge VAT, make sure that as soon as an invoice is paid, you siphon off that 20% every single time and put it into a separate account. Don't treat the money as yours. It never was and it never will be. Treat it just as a separate amount. So don't look at your total income from invoices as your money. 20% of it belongs immediately to the taxman, and you absolutely don't want to suddenly get a VAT bill and find that you've spent the money that didn't belong to you and now you don't have the money set aside to pay your bills. So there you go. Hopefully it's given you a few things to think about when setting up your business and deciding on whether to be a sole trader or a limited company, and also whether or not to register for VAT. For me, I spent the first 2 and a bit years of my business as a sole trader before incorporating nearly 3 years ago. If I was starting out again, knowing what I know now, I think I would probably do the same thing again, the same way, and I would stay as a sole trader in the early days pretty much for as long as I could. It was simpler, it was less expensive. I would, however, have registered for VAT much sooner, as I knew I was only going to be working in the B2B space with companies and organisations who were almost certainly going to be able to claim their VAT back. Of course, everything I've mentioned here applies to the UK, and things will be different depending on what country you're in, or even which state if you're in the US. And if you're in the US and you're wondering what it looks like where you are, check out this video by Graham Cochran, who does a really great job of explaining the pros and cons of being a sole proprietor, equivalent to our sole trader, or a limited liability company, an LLC, which is the equivalent of our limited company here in the UK. Until next time, take care.